Welcome to the Thematic Edge. I'm Marvin Barth, and here with my good friend and colleague, Mark Farrington, the Global Watchtower, and we're back to talk about some of the issues that we talked about in our last few episodes, where we got to interview some very interesting guests. And we also happen to be changing environment. So, Prost, we are actually together again. We're here at the Cross Keys pub in Chelsea. Something I think we should do more often, do this in person.
Absolutely.
What I wanted to start with is looking back at the Venezuela event and the Kilcullen interview, because I just thought, first of all, that interview was unbelievable.
Yeah, I enjoyed it. Definitely.
Way over time, and we still could have talked to Dave for, I think, another hour or two afterwards, if we had the time. But for me, Venezuela kind of set the tone for the year, in the sense that last year there was certainly a lot of shock and awe from the Trump administration, but there was never any clear definition. And I think other than tariffs, people didn't get the sense of a real change in U.S. strategy and position in the world.
Right.
And then as we got towards the end of the year, we had the national security strategy, which we discussed back in December, and I think was widely misinterpreted. I think we both had that. But it was abstract. Yeah. Venezuela brought this home. Yeah. Venezuela brought home very clearly the first of all, the Trump corollary to the Monroe Doctrine, or Don Roe Doctrine, as people have been calling it. But I also think one of the points Dave made, that's really, really important, which was the point about reasserting strategic deterrence. Because after the Afghanistan fiasco, after the disaster of Ukraine, U.S. strategic deterrence was basically nil. And I'm not saying it's back, and I don't think Dave was saying that either, but I do think it makes it very clear that any adversary around the world has to think twice before they try and counter the U.S. or how they go about countering the U.S.
Yeah.
I also think, and I think we'll get into this more later, it also sends, Dave didn't bring this up, but I think it sends a very strong message to allies as well. And I think the contrast with how European allies handled the whole Greenland situation, Venezuela, this, as Dave said, it wasn't a flawless operation, but it was a very impressive operation.
Yeah.
Versus what you saw, sending a few soldiers to Greenland to put a towel on the ice. Just clearly established to everyone among the allies, look, you cannot do this without the U.S. So I think that's going to be very important, given how adversarial the Trump administration has been in its rhetoric and actions with allies. So do you read that differently, or how do you think about the whole Venezuela, and what are your sort of key reflections back on that Kilcullen interview?
Well, I definitely agree with all those points, and I think that point that Dave did make about reestablishing U.S. deterrence was a very important insight. I didn't immediately put that together, but he did, and that was helpful. And I must confess that also, I think, explains a lot of the behavior of Trump administration around Greenland as well. There's also an element of reinforcing deterrence there, more the nuclear shield form. But those points are all valid. The slight difference I might have to how you described it is that for the national security strategy, for me, I broke into sort of compartments. Mm-hmm. I was interested in what it implied for the new corollary, the Western Hemisphere corollary, but also then what does it mean for the projection of power in the Pacific, the first island chain strategy, and also what does it mean for Europe and NATO and the Middle East, etc. So Venezuela definitely defined the Western Hemisphere, doctrine clearly, and I think everyone got the message. It's been relatively well received, with the kind of usual criticism you would expect anytime you use force. But otherwise, I feel like it has been surprisingly well accepted by the world and South America. I think it's helped to tip the balance in terms of elections in Latin America. We've seen Costa Rica, for example, just swing to the right as well. And I think it will be a successful strategy. And also, I would say Marco Rubio deserves a lot of credit for that as well, not just Trump in this case. And I think Latin America views it as a Trump/Rubio strategy, and that's hopeful. So yeah, I would concur on all the points.
So I don't actually disagree with any of that. When I say that, look, it was a defining event, I agree that it was a demonstration only in the Western Hemisphere and only of the, that sort of one slice of the broader national security strategy that is the Western Hemisphere Trump corollary. To me, it was more that this was the first clear manifestation of any of that, of any of the complete shift we're seeing in the U.S. relationship with the rest of the world. That's what it sort of brought home to me, that all the stuff that before kind of people thought, because one of the problems with the Trump administration is they say so many different things, and he's so good at misdirecting that you often are left questioning what is real. This made it real. This said, this is real.
It definitely made it real for everyone in the Caribbean.
Exactly.
Cuba is immediately standing to attention.
But it wasn't just there. And by the way, you remember Dave said, we'll watch Cuba next. The other one, as we saw in the next interview that you couldn't join with Senator Daphne of Nigeria, like what I thought was really interesting about that is it really did illustrate a point I think that we should definitely delve into more here, which is this tension between people being shocked and offended by how the Trump administration is treating them. On the other hand, that point I made earlier about allies realizing I have no choice because I'm either out in the wild by myself or I have the protection of the United States. And, what was interesting is Senator Daphne putting that in very clearly those terms. Hey, this was not the U.S. forced this on us. We were equal participants. We wanted this. And he's selling it at home in his own way that he needs to for his politics. But for us, this was about an ongoing counterterrorism operation, and we were really excited to have a big, powerful friend come join us. At the same time, though, he did express very clearly they were very concerned about the Venezuelan operation. So it wasn't just in Latin America, it was around the world. People said, whoa.
No, it was a strong statement, and it has various implications. And I think that one of the implications can be that you're concerned, you're either aligned with the U.S. or you're not aligned. But one of the other implications can be that if we have an overlap in our goals, it can be the most useful partnership that you can have. In this case, Nigeria definitely wanted and collaborated with that operation. It supported the government's goals as well. So I think the U.S. will be used like that, not as a policeman, but as the deliverer of the painful punitive message. And perhaps that's what the Trump posture will be like. Not a global policeman, but standing ready to act to create decisive change through use of military force.
And by the way, I thought the other, there's another whole topic, and I think we need to do a whole podcast just on this. We've been talking about coming back to emerging markets for a while because both of us have strong emerging market backgrounds. And I was just fascinated by the opportunity that Senator Daphne described in Nigeria under reform. This is the reforms that President Tinubu is taking. And in the broader context of these geostrategic realignments, in the competition for these areas and their resources and their populations and their hearts and minds, that was again driven home. The news after our interview was that, President Tinubu went to visit Turkey and establish relations with the Turks and increasing trade ties there. Separately, China and Nigeria reaffirmed their strategic partnership. So all these pieces are in the mix, and that competition is actually potentially a huge opportunity in emerging markets.
Totally agree. And if you look at the equity flows that we've seen so far in the emerging markets, there's clearly a big outflow from China and then real redeployment in emerging markets ex-China.
Yeah.
So for all of the West, which have some restrictions now on being fully invested or invested at all in China, they've made that strategic allocation, and so they're on the search for new stories, stories which maybe are less impacted by geopolitics, and where the country or the resources or the sectors have some potential to benefit from this great power competition that we see going on.
So we definitely need to come back to that one. I mean, so I think we could spend a lot of time just talking about those two interviews, but there has also been so many other things that have taken place in the last couple of weeks. I mean, it has been, as the entire Trump administration has been, a very event-packed period. We're going to want to get on to gold. We're going to want to get on to the Fed nomination, all of those things. But let's start with, I think, the next big trauma that started immediately after Venezuela, which was the whole affair with Greenland. And, I guess my sort of big picture question to you, and maybe you can talk about your perspective about what was actually at stake, what actually happened with the whole Greenland, because I think there's a lot of confused information about that. But my sort of big picture question is, was this a disaster? Was this a amazing strategic coup, especially when you consider how it landed at Davos for the United States? Or was this a bit of both? It does seem like they got something out of this, and that this was a successful coercion. But I wonder at what cost.
Yeah. Look, I think, Davos was on the calendar, and the Trump entourage was definitely planning to go there, and that would have been planned months in advance. They were definitely puffed up and overconfident after Venezuela, so they came in large, shocked the hell out of everyone. But I think it's very strategic. It had been well thought out and planned. And while I think most of the world says, okay, yes, I can see the strategic significance for the U.S. of owning Greenland, helps with a Greenland, Iceland, UK gap, managing all those the sub traffic from Russia into the Northern Atlantic, the access to minerals, all of these sort of things. Even the clever people look deeper and understand how building a backup substation to Svalbard, having all of the satellite communication and
on the island above Norway,
which it can very easily be under Russian control and can be sabotaged by Russian naval, etc. Building a backup station to that in Greenland is just smart planning, etc. People can even see that. I think there's a bigger issue that probably it has nothing to do with all of the theatrics that we saw in Davos, and it's much more related to how a nuclear deterrent is deployed and used successfully to avoid never having to use it. And so I think this is a kind of a throwback to the Cold War dente that we had with Russia, where mutually assured destruction is no longer a guarantee because of the development of low-yield nuclear weapons and strategizing about local low-yield theater usage, etc. So Russia deployed intermediate missiles in Belarus last month, and the U.S. needed to respond. Europe needed to respond. NATO needed to respond, and they didn't. So this is like one of the first times I can remember where our historical Cold War rival incrementally moved the chessboard forward, and we did nothing.
Well, this is, a lot of people aren't, a lot of people watching aren't our age, but you and I remember the whole Pershing missile push in Western Europe and how, controversial that was, but it was exactly what you were talking about, is that, well, if the Soviets were moving intermediate range missiles into Europe, the U.S. was going to respond with them in Germany, right?
No, exactly. So the U.S., I think, will not only build the base for its, Golden Dome and a backup relay station to Svalbard in Greenland, but it will deploy a nuclear deterrent that will bring the stakes back in line, because Dente requires you to remain at balance so that the first strike capability is never an option. And I think people don't understand that, well, Denmark has been unbelievably flexible in granting long-term leases and revising the military treaties with the Biden administration. It's still part of Denmark. It's a part of Europe, and it has actually a non-nuclear weapons free zone type of constitutional backing. So the way that the U.S. has always got away with doing what it's doing on Greenland is for Denmark just to look the other way. But putting nuclear weapons on Greenland during peacetime is actually an outright disagreement with the constitutional stance of both Norway and Denmark. So I think Europe doesn't understand how important it is when you have two superpowers which are providing the nuclear denton to have freedom to control the narrative, to control the incremental escalations without some second or third party intervening through legal means or constitutional means or just narrative disruptive means, etc. So I think this strategic desire to have Greenland is about the nuclear deterrence, and eventually Europe's going to get it, and eventually NATO will understand it, and it will be resolved. I have no fear of a permanent rupture between Europe and the U.S. I think that this is getting convoluted with some of the other end of a world order type of ruptures that our good feminist economy has put forward and the world is seizing to. I think on the nuclear deterrence, it's hard power and hard strategy that dictate things, and even the Europeans understand that.
Well, I think that you are perhaps more hopeful than most that NATO doesn't have some ruptures. I think even you would probably admit that there are underlying issues that might be greater issues for NATO to deal with.
Mm-hmm.
But I do think that one of the things that is very clear from the process, and I think is a sort of underlying issue that we're going to see over and over in our discussion on all of these issues, whether it was the shock from Venezuela, whether it's the shock from Greenland, whether it's the shock around, Kevin Warsh, all of these things are transitions in many ways back to things that we had before. Many of these things that people think are outrageous and are completely new are actually very much things we've lived through before.
Yes.
It's the Trump corollary to the Monroe Doctrine, which also had a Roosevelt corollary. These things have repeated a few times through American history here. As we were discussing the Persian example, there was a lot of push back then, but we have had 30 years of what was perceived Western ascendancy, where people sort of forgot about all these security issues. And so we're having to go through a transition to that. Yeah. And this gets to my point that I worry about the cost of how the Trump administration pursued this in terms of their aggressive stance on Greenland, threatening Denmark and NATO itself. I'm glad that you're hopeful, or that you have no doubt that NATO's going to survive this. am hopeful NATO is going to survive this, because I do think that, again, when push comes to shove, most NATO countries are going to see they have no choice. They have nowhere else to turn, and they are so far away from being able to defend themselves that they don't have any other choice. But how do you see that rupture in relations and this transition for asset markets? Because, I've been doing a few different client dinners over the course of the last 2 months, even before this started. But then, after the whole Venezuela and Greenland thing, I am just amazed at European asset managers' reactions to all this. They're like, we don't want anything to do with the U.S. We're getting out of the U.S. We're done with this. There is a big narrative out there about, sort of de-dollarization, decoupling in the U.S. I think there's an even crazier narrative, by the way, about, how Europe is somehow going to pivot to China, as that somehow even remotely possible. But talk to me about that, because you've managed big portfolios over decades, looking at major asset allocation shifts. How do you view this one and the potential for an asset allocation?
Okay, that's good. I think that it does favor those who've been in the markets for 30, 40 years here, because
you have a little bit of gray hair.
Yeah, exactly. I think people just cannot appreciate how to favor the U.S. dollar was and the U.S. government tactics were in the early 90s. Most people look back and think of the 90s as this blissful period of the Berlin Wall falling and globalization causing us all to dance around the campfire together and sing Kumbaya. It was not like that at all. The U.S. was using Super 301 tactics to beat the Japanese into submission to open their markets, because they wouldn't import anything from the U.S. And, the U.S. dollar was in a free fall all the way to 1995 until the G7 begged the U.S. enough to get the strong dollar policy to come out of the Treasury Secretary's mouth,
But by the way, in this whole dollar debasement thing, you just reminded me. Do you remember Lloyd Benson, effectively calling for a weaker dollar, right? People are flipping it out. Lloyd Benson, Treasury Clinton's first Treasury Secretary before the really strong dollar policy, and in fact that was a reaction to it, actually called for the dollar to depreciate.
No, but that was the tactic back then. It was a two-track strategy with Japan and with Germany at the time. Was that we're going to basically use Super 301 to bash open your markets and simultaneously drive the currency down to force you into compliance, because we understood that most of the trade barriers were invisible, but we didn't care. We needed to balance the budget. We had a twin deficit problem at that point in time too. So the federal deficit was not easy to resolve, so the focus was on the trade deficit. So we've been through this before, and the thing, if you go back and look in the 90s, the dollar can be in a downtrend and still U.S. asset performance can be fantastic. And that's what all these emotional reactions from asset managers like those that you have met will soon learn. It's like, you can be angry at the politics, you can be offended by the way Trump, shocks and awes in order to create some movement in a frozen debate. But you still, in the end, you get paid to deliver, asset performance to your portfolio. So you can hedge your currency risk for a while, but then if U.S. equities and U.S. growth stories start to outperform, you've got to then lift your hedges and rotate back to U.S. So the U.S. will do what it always has had to do, which is to justify the strength of the dollar by performing, delivering strong growth and strong asset performance. And during the periods when it's ebbing or oscillating, it will sell the dollar and then it will buy it back as soon as the asset performance validates it. So the first 6 months of this year is going to be one of those trials. They'll try to sell the dollar. They'll be skeptical about whether war is good or bad for the Fed, etc. But then, if growth and earnings come through by the second half of this year, the fears of dollar declines under Trump war investment will dissipate, and this will be all forgotten. On the geopolitics, it's such a longer time frame. I mean, what the U.S. is going to try to do on Greenland is really a 10-year story, of which Trump is only going to be there for another 3 years. So at some point, Europe has to start relating to what the long-term story is and who will be the next custodians of this strategy in the administration, not just Trump. This is a strategic realignment for the U.S. in terms of its nuclear deterrent and its forward projection of power in the North Atlantic. And it's going to be owned and carried forward by the whole administration, not just by Trump. So I think everyone will calm down. I even believe Carney will come around and Canada will join the Golden Dome. I mean, honestly, it's emotional at the moment, but understandable, because Trump speaks in a way that offends first, and then his administration backfills and sues and delivers performance after the fact.
Well, I think even you were saying that at Davos, it was quite interesting that Friedrich Merz, the Chancellor of Germany, was, of course, we're so offended, terrible. And yet then went through a whole list of, but we agree with this Trump administration, X, Y, Z. Went down the list is that actually when you stop and think about a lot of things they're doing, if you just get away from your prompt reactions, whether it's, a political bias or just the fact that this language does so offend. There's a lot that you can start to look and say, well, actually, that makes sense. Now, I do want to come back to this point that you said about the dollar in the early 90s. I thought that was quite interesting because I think you and I have somewhat different views, but there's some anchors on
really important.
So I thought it was interesting that you framed the discussions of first half, second half, that you have to wait for earnings to come in and see if there's going to be fall. You're aware I've done this research on what causes these big, huge, multi-decade swings in the dollar. And, the critical element there is the U.S. leading an innovation wave and a sort of capital build-out. And until that capex build-out in the U.S. peaks, the dollar doesn't turn. So I'm still very much in the camp that we're having some tactical flings in the dollar right now that can be affected by asset allocation. But ultimately, until we see that hand over to the rest of the world, which I don't see in the near term.
No, it's not.
We're not getting a significant dollar downward trend. But I very much do see this year as a year of two halves. And I suggest that so far things are going the way, which is that I had expected the worst. That was who I thought he was going to pick.
Great call.
Thank you.
I think you deserve a drink for that.
Wave to the crowd. Thank you.
A hawkish Fed, who could imagine?
Exactly. And now that's a whole question we're going to discuss about whether
what type of hawk,
what kind of hawk he is, and whether he really is, because there's a whole debate on this. But I definitely think he will end up being hawkish. And my view, what I was expecting is when he's announced, when he comes out with his plans for how they're going to downsize the balance sheet. And if you look at the entire Trump administration from day one, whether it was Secretary Bessent, whether it's been, Moran, whether it's been, Trump on the campaign trail, and of course, poster child of this, the guy who, as he leaves the Fed in 2011, mic drop moment, publishes this op-ed in the Wall Street Journal criticizing the Fed's QE policies and saying this is ridiculous, they're not doing anything, and it's just exposing the Fed to political risk. He's been on this train longer than anyone else. So I have absolutely zero doubt that they are going to massively downsize the balance sheet, and they can. And the key to that is, as I've described in my research, bank reform. But of course, even though we've had this debate before, I'm not a big believer that QT has that much effect on rates. I completely acknowledge, and in fact, I have a theme, being is believing, that, if people believe something is true, it will have manifestations, right? And so I do expect the first part of the year is going to be a bear steepening. And that was very much like those first 2 years of the Clinton administration, where the dollar was the dog, right?
Yes.
I just think this is going to be compressed into a year. And, we're going to have bear steepening. I think Ward has convinced himself that indeed, the tightening of financial conditions coming from balance sheet consolidation is going to allow lower rates. I think they're going to see the economy is going to be doing too well. Inflation is going to continue to be above target. And they're going to have to raise rates because the fundamental real rate underlying the economy is higher than what they think.
She's in almost.
And that means you're going to get a bear flattening in the back end of the year. It's impossible for me to see anyone else do well in that environment. And by the way, I'm saying that expecting fully that equity at best are going to struggle, and at worst are going to have some pretty significant downdrafts in this moment based on the duration adjustment that I just described.
Yeah. No, I totally agree with that view, and I think that, the 90s are a very useful decade analog for this decade. A time compression might be smaller, as you suggest, but the sequence I feel is very important. So the bear steepener, which takes place, in the first half of the 90s, is driven by the ultra low rates that Greenspan put in place in the face of the jobless recovery after the S&L crisis. And that
then Australia rates that I think were 3%.
Yeah, 1% real rates or something. It was it was stimulative, and of course the dollar weakened so much that financial conditions were really very supportive. People forget, dollar fall 10 or 50% is also a huge support to financial conditions. Boosts all of the manufacturing bases, earnings profile, etc. So then we move into the latter half of the 90s, and it's all about this secular trend of productivity driven by the internet and technology investment, as you mentioned. But the earnings momentum builds from 96 to 97 until it gets to blow up top, at the end of the decade. Yeah. So I agree when the earnings blow off, we're midway. We're not at the end because we haven't got, nominal growth high. Last year, the Mag 7, all the super cap-rich companies were able to spend massively on AI capex. But the broad economy was just gaining momentum. This year, nominal GDP is going to be very high. All of the businesses are going to deliver profit growth this year. It's going to be a big earnings year for the U.S. economy across many sectors, not just one sector. And that's going to be more positive, building this momentum that starts to feel like the end of the 90s decade. So I'm not so much focused on the time frame, but the sequencing. Bear steepener first. Banks began to play the carry trade on the yield curve. Bank earnings goes through the roof. Nominal GDP higher, earnings across all mid-caps, small caps, all regions of the U.S. economy starting to fire. And then finally, belatedly, the productivity from all the AI investment starts to manifest. And then you get this, powerful end to the cycle. So, I'm saying first half, second half, just because, I have to position and trade the markets. And you're trading a narrative as well as the data.
Yeah.
And so, but it can be slightly longer but slightly shorter. I'm just more interested in sequencing rather than that time frame.
I think that sequencing makes sense to me. I would suggest that you sort of touch upon an element there, which is rotation. right?
Yeah.
And so some of the other things I've highlighted that you should expect in this market is one, bank outperformance in relative terms, right? So,
which we already have in Japan and in Europe.
And I think it's and you actually have already seen it in the US, but I think you're going to get a much better year for this year. And then this duration effect.
Yeah.
So what do I mean by that? So first of all, you point out, Jix, absolutely correctly that if we're going to get a yield curve steepening, which, by the way, we now have a steep yield curve. It's actually all the way from 1 year out to 30 years. We have a positive slope the entire time. For the first time, I think this just turned the front end just came in within the last couple of weeks. So this is the first time since 2021 that we've had that slope, right? Which is pretty impressive. And so you're going to get that. That means that banks' assets are going to be paying more than their liabilities. But the other big thing you're going to get is how do you get to a slim down balance sheet? How do you slim down a sum of portfolio? As I've explained in various research pieces, this is 100% about Basel III regulations.
Right.
All these people have been fretting that you need all these reserves in the system. No, that is 100% dictated by bank regulations.
Yeah.
And the Fed has the authority to withdraw those, or not withdraw, but to dial those back and give the banks more balance sheet. If they have more balance sheet to work with, they don't have to park it in reserves. They don't have to park it in treasury securities. Then guess what? They're going to be a lot more profitable because that is just a huge drag on their profitability. So you get both of those events, the yield curve and the deregulation, that are both supporting these banks. Then you have this duration effect, which is, what I see this entire event as, if we're going to talk about a level shift upward in the curve over the course of the year, plus the steepening based on term premium, concerns about, duration, supply in the market, all that in the first half of the year. And this, by the way, I think is a critical element of why gold has sold up, right? Gold is basically a super long duration real asset. Is that duration effect carries over across all assets. And when we think about what equities are high duration. They're basically an infinitely lived variable payment bond, right? And your P ratio is effectively a measure of equity duration. So if you go back and look at 2022 when we had the last big durations, I mean, it's almost linear, the relationship in terms of the duration of the equity, i.e. its P/Z ratio, versus its decline in 2022. So almost a linear effect. You're going to get the same sort of thing. So I think this could be very positive for a lot of industrials, materials, especially in this geostrategic environment where we're going to see a lot of state support for materials, and for small and mid caps that are going to be producing a lot of these things that the U.S. is going to need on its reindustrialization path.
That's all really good insight, and I was looking forward to talking to you on this because, so far the market reaction to the Warsh announcement has been, the most speculative bubbles trading on the debasement trade, collapsing, and so I think that's a logical response. Maybe the reaction is driven by a number of other, market dynamics like, China banning the export of silver and things like that. But I mean, really, it takes the wind out of the sail of this idea that term premium decompression at the long end of the bond markets is a correlated trade with the debasement trade of the dollar. Because Warsh comes in and makes it interesting. Like the bear steepener we're talking about now, which can be construed as this decompression of the term premium, is a very different story than the one that they're trying to make in buying precious metals and selling the fiat currencies. Because he's simultaneously strengthening the balance sheet, and it's a hard money strategy that he's trying to put in place. So the two data points don't correlate anymore. So they have to drop, I think, the term premium aspect of their story, and they have to accept that he's going to be at least partially successful in downsizing the balance sheet. And for a lot of speculative assets, I know you argued that the balance sheet doesn't have that much impact on interest rates and credit creation, etc. But it did have a very big impact on risk appetite. So, I mean, that was the thesis of the portfolio channel. Drive down risk-free assets and create, greater animal spirits in the risk asset classes. So we're going to see an unwind of that. So this mean aversion back to a lower level of risk tolerance, if you want to call it that, can create some accidents. So we've already immediately had an accident in precious metals. We've had a correction in the AI stocks, partially due to a couple of single names missing on their earnings expectations, but also I think you'll see froth taking out of the market in all of the most pointed risk yields. And as long as that doesn't get out of control, then I think the stock market will consolidate, and then all the other sectors that you mentioned that will benefit from strong nominal growth and a higher duration environment will eventually have time to catch up and deliver the results that will then offset. Because this rotation is going to be choppy, and people will try to construe it as bearish. But if you're patient and you wait for the green shoots, then it might end up being positive for the second half of this year in a way that people didn't expect, and actually be a very bullish year for certain things, like even a rotation back to sovereign bonds, in my opinion. Like this big move from a 60-40 portfolio to a 60-20-20 hopefully has just add the silver dagger on the hearth after watching, precious metals deliver 45% volatility on gold and 100% volatility on silver. It's precious metals are not a substitute for bonds. They never have been and they never will. But, bonds have been through a bad patch. I'm not calling for a bond renaissance or anything like that. I think there's a lot more opportunities. But a lot of the most aggressive debasement stories about, sovereign bonds in the developing world, I think those will now start to be rethought and recalibrated.
Yeah, so I don't. That's such a really interesting point. I think we should spend a moment to talk about what happened with precious metals and whether we're going to see those highs again. As well as
good call, by the way. In your metals piece, you kept flagging the 1980s episode, which is like the most extreme episodes, or very much dismissing it. But silver price, which fell on Friday, was the largest since 1980.
Exactly, it was literally a repeat of these things.
Well, of course, it's still miles above that high, but in terms of dollar value fall, that was the largest one in 1980. Yeah. So awesome to go over.
Well, you actually had written something on gold. What was that?
Yeah, last summer.
6 ago, 7? No, I thought it was.
I wrote continuously the first one in the summer, just arguing that precious metals are a risk asset. They're not a hedge.
Yes,
so
exactly.
This 60-20-20 portfolio was just like, to me, insanity.
It makes no sense. So let's come back to that. Let's also come back to risk. But I think the point that you just raised about bonds and then becoming attractive is really interesting here, right? Because and I can see this coming in the sort of typical wave pattern that happens in markets.
Yeah.
So I can actually see, that, right now we're going to go in a direction selves because the momentum is only going to build. Like, now there's questions of what Morse really is and what he really believes and things like that. I'm firmly convinced the entire Trump administration, everywhere he is, we want a smaller balance sheet. Yeah. So this is going to happen. There will be speeches on this. It will become clear. Probably after congressional testimony, because you don't want to rock the boat until you're confirmed. But this will come along. And so we're going to get continued bear steepening. But at some point, There will be people who say, well, gosh, I don't believe in the strong growth story that you and I seem to accept for the U.S.
Yes.
That's been the persistent bias of market for the whole time. And they'll say, hey, there's great yields out there. I'm going to go in and buy into these. Especially with moving towards a full sounding honey and what I meant. And I just had to unload my 20% commodity portfolio. All of those things I think support it. But I think this is really much more a settlement kind of story, to your point. That's what helps give you that bear flattening that I'm talking about. Yeah. And it's almost as much a pivot in the curve. Rising, but the back end will actually rally to some extent a certain amount of forward basis relative to what's going on in the context. Yes. Simply because you are actually dealing with inflation, you are dealing with a lot of the underlying concerns people have about dollars. And to your point, you actually are going to get big. So there is a pretty good chance for a second half of the year of long in duration rally.
Yeah. I have a question for you on Wash because, like we joked about earlier, what kind of hawk is he? Because for sure he's a balance sheet hawk, and for sure he's, let's call it a regulatorist.
He does.
So we're going to see a streamlining of regulation. We're going to see a downside of a balance sheet. This is guaranteed. What he's going to do on interest rates is not guaranteed. We have, everybody is constructing their narrative based on what Trump says and imagining that, Walsh made some secret agreement with him in order to get nominated, which of course is completely an unknown. So I think can he be considered a hawk by just downsizing the balance sheet and deregulating and then, and maybe still being willing to cut rates? Does that make him a hawk or a dove? Particularly if the dollar is weak, because all the monetary conditions frameworks are going to show monetary conditions getting easier, while nominal growth is going higher, and the balance sheet and the deregulation stories take a long time to play out. So I wonder, is there a risk that the impression of him as a hawk was flipped because they didn't really understand what we meant by hawkish. We meant he's more conservative, more orthodox than Powell and Yellen. And we're going back to sort of pre-GFC monetary policy mentality.
Yeah, so there are several different pieces there that I think are quite interesting. And I really like the way you phrase that, is that he's really just more orthodox.
Yeah.
There was this philosophy for a while that all sort of post, or certainly into the Greenspan years and post-Greenspan years, this idea of a hawk or dove didn't really exist anymore. That everybody's a hawk now. It's just how you should pursue your hawkishness, right?
Everybody can't be a hawk.
No, exactly. But there is an aspect to this. I think that, I do think that there's definitely a significant portion of the current FOMC that are just flat out doves. I have no question these people are doves. But I do think that there is an element of it's just two radically different philosophies, right?
Yeah.
And this was sort of brought home to me by one of the things I read about Walsh by Claudio Song. The song.
Yeah. Oh my God.
The most ridiculous rule in economics. And she very much embodies this view that I would say is the sort of dominant paradigm of the people who run central banks for the last 15 years for sure, maybe 20 years, which is this view that they can micro-control everything, and that there are no limits to monetary power. And she's specifically highlighting the 2010 episode just for Walsh left the board, where he's critical of, hey, we're going to take this big risky maneuver of extending the balance sheet. We already have rates at zero, and hope that it somehow affects the economy. And I'm just not sure that's the right move. Maybe this is where other parts of the policy that goes like fiscal policy or regulatory policy need to pick up the slack. And she's critical of that. She's like, well, you're giving out. And I'm like, well, no, because you actually are at the end of the bounds of what monetary policy can do. And I think you can, to Claude Sami's point, at that point, even though we have 10 years of experience with this in Japan, which you were very familiar with, you could potentially argue that we didn't know for sure it was right there. It was theorized, Keynes had told us this, and the argument was with Japan just hadn't tried hard. Right?
Or Japan was just too different.
Yes.
Just a different market structure.
But I think, 15 years on,
it's pretty clear.
It's clear. QE was totally ineffective. It did absolutely nothing for inflation. It did absolutely nothing for growth. It was just exactly what Kevin Warsh described it as, a massive political liability.
It was an unbelievable call. Like, I read Sam's comments on Twitter, X, and for me it was embarrassing. It's so clear she's just data mining the minutes because she wasn't there and she wasn't part of the conversations, and everybody knows the minutes are a distilled version of the actual conversation that was going on. It could have been even Bernanke asking Warsh to play devil's advocate and talk about the risks on the other side. It could have been anything. He did push back.
I think it was pretty clear he actually was adversarial to
I think he would have volunteered to be devil's advocate. But they needed pushback from someone, and he was giving pushback. But if you attended the Monetary Policy Forum every year for 30 years like I did, you would see how the consensus, the debate, the devil's advocacy, etc., changed all through last period. And the people who were constantly pushing back were very well known. It wasn't 1 year, one meeting. It was this incremental induction to the cult almost that was going on post global financial crisis, and it just became so divorced from what the guardrails were for monetary policy before 2008 that any reasonable-minded person from the 90s or pre-2008 would have the same criticism. So people ex post like Sam who come back, 10 years after the event with no connection to that phase in history, they're
and she wouldn't have been in the FOMC, but she was a fed comment. But I totally agree with you, and I think that's kind of my point in terms of your question about is he a hawk, is he a dove? I would say that wasn't a hawkish or dovish thing. He was just saying we've reached the limits of monetary policy, and that's most, I would say, the world has proved him right. And so what I do think that's very different from him thinking that, like I do, that quantitative tightening is not going to actually have that significant effect. I think the rhetoric that you've seen, people are ascribing it to a political pivot for Trump. And there may be some aspect of that. I mean, everybody plays politics to a little bit. Nobody wants to admit that, but everybody does to some extent.
You're in Washington,
you have to. But I think it's much more. He has actually convinced himself that indeed he's going to be able to keep low rates with balance sheet reduction because it's going to have this effect. And that's why I have this view of how it's going to change these year. He is going to stick with a relatively low rates profile in the front part of the year as they try and slim down the balance sheet. And then in the back half of the year, they're going to realize, my goodness, the economy is still booming. Inflation has not come down. We are not getting the balance sheet effects that we saw on the economy. And they're going to have to raise rates, and that's what's going to give you that. So I think that's what I meant about everybody's a hawk in that sense. I think he wants to see inflation. No Fed chairman wants to be seen as, I've described Jay Powell as, like the second coming of Arthur Burns, right? Nobody wants to be seen as that. And he's going to be no different. He's a rich, relatively young man. He's going to want to protect his legacy. So I think he'll do that. The other thing that I thought you said that was interesting is it will take a while for bank regulation. Look, the board, and especially if they start to get some of the presidents, and it was such a critical issue, start watching the president's turnover. Because the board, and particularly the chairman, can have the big, heavy finger to press on the dial of who gets those presidency. The New York Fed is probably going to come up soon. John Williams, thank God, will hopefully retire. Worst pick ever. That's on the record.
I always liked him as an economist, but yeah, his worldview definitely deviated massively in the last 5 years from mine. So.
I've long since I knew him back in the board. But anyway, I would say that first of all, they have the ability to change regulation very quickly. And the second thing is to go back and look. You're actually old enough to remember this. You remember the 1981 bank controls and bank deregulation and how quickly that turned the banking system on and off in 1981.
I was a college student. I didn't know shit.
It's a family podcast, Mark. It was radical. It happens very quickly. Those regulations are super powerful. So this is another reason why I think you will have less of an effect from that balance sheet effect than people think. Because if it's accompanied at the same time by deregulating the banks, it's going to be a big thing.
Interesting. Okay, that's good to know. One last thing on war. I guess I've always understood your point of view that QE has limited impact on rates and credit creation. Therefore, QT in the reverse direction should be treated in the same way. In my opinion, what's missing from that is that doing QE in an emergency scenario after the global financial crisis, which was to address, seized up interbank market that was not functioning, is one type of QE. When you started to do QE in increments that were supposed to be equivalent to a 25 basis point rate cut because you had the lower amount of rates, then QE became another animal, and that broke with a precedent that had never been done before. And that is what fed the animal spirits and the change in risk appetite. It was the break of precedent. It wasn't the size or the incremental amount. You broke a precedent that had never existed before. So in my opinion, that is when the debasement vigilantes were born. And they have been running with that thesis through DeFi and Bitcoin and precious metals ever since. And so QT, yes, should be treated equally as unimpactful as QE on the way down until we cross back through that threshold of orthodoxy and we get some commitment from a war that, for example, says, we're not going to do this again. We will, of course, be the backstop. We will come to the rescue if the market seize up and fail to function, but we will never again equate $300 billion of balance sheet expansion with a 25 basis point rate cut. If he makes that pledge, that's putting the genie back in the bottle. I actually think that is different and will have an impact.
I think everybody now calls any type of balance sheet expansion. That's not. Central banking 101 going back 150, 200 years was in a crisis. You, the central bank, are the, quote, lender of last resort. That was actually their original function, not managing inflation.
That's financial stability stuff.
I'm willing to take on all your assets when nobody else will.
Exactly.
In a crisis. I'm not saying that doesn't have an effect. That is exactly what has an effect. I'm saying exactly what you just said, that when you start saying, there's no crisis here, I'm just buying assets for assets' sake. First of all, it doesn't have the risk effect that you think. I think everybody thinks that, but if you actually look at what happened to the credit spreads, if you look at what happened to the equity risk premium, all of those variables, they actually show the opposite of portfolio balance sheet effect. They actually widen in each bond buying section, right? Because you're taking away the risk-free assets from market thus making the whole market riskier, and thus the only way to de-risk is to sell off the risky asset. That's actually what happened.
Might have happened in the beginning, but then with time.
Now, to that effect, what did seem to change things is that it was actually one rate cut in 2019. If you look at that period, when the Fed very clearly showed that they were convinced that R star was much lower and that they were always going to err on the side of cutting rates and easing the conditions, and you didn't have, to my mind, if we hadn't had COVID, you would have seen the inflation pick up anyway. But at the time, it didn't look like inflation was getting out of control.
No.
And so as a result, if you look at that period, you do see that the relationship between term premium and volatility flips. That instead of volatility leading to higher term premium, i.e., risk uncertainty priced into bonds, you get things actually negative because people expect exactly the effect they're talking about. And I think we are slowly unwinding that right now. And you're right, a worse Fed, if it does what you and I are expecting or talking about, I think this is the final nail in the coffin that we'll get some final normalization of term premium that will allow us to have that bond rally that we were talking.
So does normalization of the Fed mean normalization of finance market volatility? Because if we go back to risk assets having structurally higher vol and risk-free assets having structurally lower vol, then we go back to normality in terms of portfolio construction.
Yeah, no, and I do think that's instead of having a floor-based rate system, we're going to have a corridor-based, which is again, return to normality. And you remember that, back in, even well into the late 90s and early 2000s, triple witching Wednesday, you could have Fed funds rates spike to 35% overnight. That was a normal occurrence, right? Nobody flipped out.
Yeah, volatility, was a part of our life back in the 90s. It really was never the systemic, canary in the coal mine that it has become in modern markets. So.
But we're going to have to call it off here, and I think this has been a good discussion. As I said, there was so much to cover today. And so thank you again, Mark Farrington of the Global Watchtower, for joining me. Thank you, our audience, for watching us here on Thematic Age. And we look forward to seeing you again in 2 weeks.
Excellent. Thank you.